All right, let's turn to the markets and take a look at the futures. As I say, the Dow and S&P up slightly, the Nasdaq down slightly. It's a very usually low volume trading week between Christmas and New Year's. David Nicholas is here to talk about it. David, good morning to you. Okay, so we're in the final trading week of the year. Are we going to see a Santa rally? Usually the last 5 trading days of this year, the first 2 of next. We had an up day last Friday. We're still on for Santa. Or has that sleigh already sailed? What say you?
Actually, it may have sailed. I mean, it's still possible, but the odds are it's probably not going to happen. I mean, from a technical standpoint, a lot hasn't changed for the market. I mean, if you look at the S&P, you look at the Nasdaq, they're still trading under their 200-day moving average. That's not a very bullish signal. And we may have a good 1 or 2 updates. If you remember when I was in studio a couple weeks ago, Dow was up 800 points, only to reverse and go negative by the end of the day. So, like you mentioned, this is a thinly traded week. We could see a day that we see an update, but this is not, in my opinion, where investors want to be adding exposure. We recently just rebalanced our tactical portfolio. We overweighted energy, we overweighted healthcare, and we overweighted treasuries. That's not a very bullish sentiment. So I think investors want to maintain protection going into the new year. Have your watch list ready, because I think you're going to get a better buying opportunity first part of next year, actually.
I read your notes, David. You like the energy sector. We know that China is trying to reopen and get its economy rolling again. It's not been easy there, but you believe the demand for oil is such that it looks good for that particular space. But how do you play oil? How do you play it?
Yeah, that's right. Actually, Beijing just ended their just ridiculous COVID lockdowns. That city has come roaring back to life. So if you're an energy bull like I am, that should be music to your ears. So one of the ways that I think is a great way to play it is through XLE. We just bought that dividend on Friday. We allocated to XLE. That's paying about a 3.7% dividend. But if that's too boring for you, PXD, actually sit down for this one, 11% dividend. PXD is essentially profitable as long as oil stays above $40 a barrel. We're way above that right now. Devon Energy is another name, 8% dividend, and Exxon trading at about 3.5% dividend. So in my opinion, energy is a place that you want to be allocated to. With 11% in PXD, actually, it's hard to argue against that in this market.
It certainly is. All right, David, we'll have to leave it there, but thank you very much for joining us this morning. David.